I can read if you want. We can
Yeah,
go
you
that
can
route.
read.
I can
I'll-
read.
I'll
Sometimes
let
a
you
little
have Morgan
choppy,
Freeman
but I can
voice.
read.
So I like it.
So the
Can I
mental
ask-
game is still a challenge for me. Being chopped up this year has made it difficult to be positive, and I've found that taking time away from the screen has helped a lot.
Now that's one. Go ahead.
It's more a statement than a question, but I think we can all agree with that. There's no question that it's
right.
been...
That's one of the things that Pat is saying constantly, right? You just on the weekend, you need to just step away. Don't sit there and beat yourself up over whatever happened during the week, especially. You need to take a break from the gadgets and the technology.
Yeah,
the markets will always be there.
Yeah,
It's not gonna.
Go ahead. I'm sorry.
No, I was just saying it's not going to help you at all to beat yourself up over whatever happened during the week.
That's it. You've got to
stress about it.
I read this years ago. I mean, decades ago. One of the best attributes of a successful investor is having a short-term memory. People say, well, that's kind of a contradiction. Actually, if we take it a step further, right, we constantly reinforce and stick in our head what works and what doesn't work, but we don't. And this is something I worked on years ago. Don't dwell on the losses. It'll chew you up alive. Which is also to me very important. Why? If we keep losses really small, you forget about them then. They're not there. And the other thing I'll do related to psychology, and I'll tell you, I think it's awesome you put that first, because it's what's up here that counts. It's not the tactics or any of that discipline, any of that stuff. If your head isn't screwed on straight, it doesn't work. I've experienced it. I remember I had a major surgery years ago, and I had to quit. I had to stop because I knew I had to focus on what needed to be done. And then when my dad died, I had to quit. I had to back off. This going up here, the last thing I'll say, and I'll let you all talk because I don't want to overwhelm this, is really, and this is for all of us, the four of us here, I'm speaking from my heart, for myself too. We got to really protect what's going on up here and take care of it and focus on positive stuff. A confused mind always says no. If we focus on the positive stuff and know what works, and we know what works, stick with that and turn off all the noise that's out there on social media. For me, it helps me. I'll tell you guys, this is true confession. I'm in our VIP Twitter feed. I don't want to look at a bunch of stuff. It just gets in my head. And I'll tell you this too, and Owen and I talked about that. I don't have Fox News or any of that stuff in my office. I don't. It's always the end of the world on all of them. I'm not knocking Fox News. I just went positive. That's my deal there. It's just clean and simple. Focus on what works and turn off the noise.
Absolutely.
That's my
trading deal. Is as hard as it is, and life as hard as it is. Focus on one thing. If you're not right up there, don't worry about trying to make money in the stock market, because it's just going to turn out bad. And I think I touched on it in the webinar about disassociating yourself with your losses. You can't let that become who you are as a person, let alone a trader. Being able to just take the losses and knowing it's a part of your process and your plan. Over the course of time, it will be, part of the numbers, part of how you make money.
It's kind of like, you're getting an education while you're doing it, and you have to pay for that education.
Mm-hmm.
So you have to learn from it. Yeah. You're going to pay out before you start really making money. And that's there's no magic stick to help you get ahead of everybody else. There's no secret method or anything. It's just experience.
I see a point here about confidence to trade bigger size. And when I was doing the IBD meetups, I always used to tell people, and Owen, you know this, you and I've talked about it through the years. If you can't make money with 100 shares or 50 shares, you're not going to make money with 1,000 shares. And the other thing is, you amp up that size and your emotions all of a sudden get bigger and you get more skittish, which screws up our thought processes. So I always tell people, go small. This is what I do. Even when I have a string of losses, is I'll start going smaller again and rebuilding from that. I don't say, darn it, I'm going to get after it this time. No, build on the success. Yeah, those are good.
Well, that speaks to discipline. So the second one there is stick to a system that I can follow with discipline and have confidence in its process. And you have to build that small. Matt mentioned in the webinar tonight, I think you say you lose 60% of the time, right? And that's true. We do. 65% of the time we pick the wrong side and we don't get to stay in. We get whipped out, whatever the case may be. But you have to have confidence in the system and in the process. And that takes repetitiveness. One of the things I'll teach, and people email me and they'll ask, how can I get started with this and how can I build confidence? I'll tell them, hey, you know what? Best thing to do is trade really, really small. Trade 5 shares. That way you can sell 20% of the strength. So you sell 20%, you sell 1 share in the strength. You say, well, I'm not going to make any money. No, you're learning. You're building a confidence. You're building that structure that says, I can do this.
Right on.
That's critical.
You're rearranging this. The human thought process is always money, 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 money. You see it everywhere. But to get to nail down the process and not focus, well, I'm not going to make as much money. Well, you're learning the process, which is twice as valuable as the money that you're making. And then over the course of time, you size up. But you're not. When you do size up, you're not thinking, oh, I got 100 shares, 1,000 shares, whatever the case is. You're not thinking of the monetary value attached to those shares.
Nope.
You're just thinking process.
Yes.
All right, I bought 1,000 shares. Now I need to add on 300 shares. Now I need to add on 200 shares. You're not thinking about the dollar value attached to that. It's just systematic.
Yep.
If you start, this is what happened. Yeah. When I start thinking about the money, instead of what you Matt and Owen, I enrich too. Instead of good stock management and execution, I get messed up. And I've been doing it for a while. It's like, oh man, look at this. So just cool, calm, and collected.
Easy to get caught into it.
Oh yeah. Can I say one last thing and I'm going to stop? Something I encourage all of you to do. This is for all of us, including Pat Walker. Don't look at your equity and don't look at like, man, this is how much I'm up on Google or this is how much I'm up on whatever. No, don't think about the money. Think about good investing execution, like you guys are saying. It makes a huge difference. If you start thinking about, this is in Market Wizards too, which is a great book by Jack Schwager. You start thinking about the money, it clouds your judgment and decision.
It does. So anyway. And that takes practice. You have to practice doing that. And it's not easy to do it. But if you practice it, you'll eventually get to the point to where you won't need it.
Right. You've got to train yourself. The first part of that statement, though, is about to stick to a system, stick to one system, right? So you have to stop looking for other systems. You got to stop. You got to stop looking for like the other secrets that maybe someone else has.
The greener grass.
Yeah. You gotta
the greener grass secret system.
Yeah. I got to try this.
I mean, if you want to stay with trending patterns and everything, this is probably where you want to stay. If you want to do day trading, I don't think Pat looks at 5-minute charts. I'm not sure, but I don't think he really looks at those.
Yeah, you know me, Rich. I'll tell you, if I looked at 5-minute charts, I wouldn't be here because I'd be dead. If there's too much for me, there's too much emotion in the 5-minute charts. And it constantly screwed me up. It's just stressful.
Like I'll just add here on the we all laugh when we're talking about greener grass and the secret system and all that. We all laugh. You notice we're all cracking. The reason that we all laugh is because we've all done it. See, you got a whole bunch of head nods all the way across, and we've all done it. We've all looked.
There was some good questions after the webinar. I had stayed in Discord, and one individual was saying he started off trading in very short term, minute and 5-minute charts. And I told him that I was there. And I said, he's having a hard time changing from that style into a little longer time style. And I said, you know, one big thing outside of how I became super disciplined is I hate running. I cannot stand running. I'll go on a bike, I'll go hiking, I'll go whatever else. I just cannot stand running. So I said, I made a promise to myself, if I looked at a 5-minute chart or a 1-minute chart, instantly, either I'm done for the day, no more trading, or I'm running 6 miles every time I look at a 1-minute chart, 5-minute chart, because I hated it. Who wants to do that?
I remember that 2 years ago. 2 years ago, you were really thin, so you quit looking at the 5-minute charts. It worked.
Yeah.
There's wisdom in your statement, man. Just leave them alone.
Yeah, it's true though. You kind of got to think of yourself as the Freud and dog and bell system. Reward yourself when you do something well, even if it's following your plan. You might lose money, but following your plan, reward yourself. Negative thing, discipline yourself.
I see a statement here too, and it ties in with what you're saying, man. I tend to sell at the first hint of trouble, and that's where, looking at the shorter time frames, what looks like the end of the world on a 5 or a 10-minute chart ain't nothing on a daily chart. So we focus on the daily, and I tend to sell at the first hint of trouble. I found something that's worked well for me is, barring a catastrophe, which 9/11 or whatever, I sold everything. I just poof, hit the button, it was gone. But, and I'm not trying to be negative when I say that, selling off in pieces, it's like, oh, okay, I'm going to sell off a fourth, it's dropping. Okay, I'll sell off a third now. I'll sell off some more. Instead of, geez, I got to sell it all. Systematize that way, with the caveat, and this is for everybody. If it's really dropping, sell it. Just sell it. That's what I do. Now, I'm not telling you to, but that's what I do, and it works. And again, I was there for the crash of '87 and everything since. So I was there for 9/11. That was a real joyride, especially when they halted trading. I go, it's going to be bad when this thing opens up.
And you didn't hit that sell all positions. You were selling in chunks, like you're saying. Yeah,
and also, that was back in the days. I was phoning orders into Chicago, telephone. Yeah, there was no internet that I was using at that time. It was phoning orders in. They loved me in Chicago. God, margin calls. Anyway, enough of that.
Well, that's a. Go ahead.
Go ahead, Matt. No, it's
okay. Setting your stop losses and walking away. If on a big gap down, see how it plays out. Don't sell anything right out of the get-go. It could finish near the highs that day in reverse, and I've seen it happen. We all have. To have that patience and to respect your stop losses and not micromanage your positions. Is huge. Because you can justify any kind of selling, but look at the chart. What is it telling you? What is the volume relationship? Is it bad? Is it taking out the previous day's lows? Do I need to sell? Is it an inside day with light volume? There's so many variations of the world could end, especially on different time frames. Respecting those stop losses goes a long ways.
And I'll stop talking about this subject, but I think it's really important. Something that I've read and something that I've learned from other really good investors. I'm not going to say names, but what has helped me is, you buy something and it starts to go up. And the rule, what I say, you sell some into strength. You lock some profits in, which releases that emotional tension. One of the things, letters I get a lot, or emails I get a lot, it went up and it was doing great and I sold all of it, man. What can I do? It ties into all these statements here. And for me, I'll sell, and I hate to say the phrase, but it's a fact, sell some into strength, sell a little bit off, which for Pat Walker, and you got to remember, for years I was supporting a family of 6, man, and I had to make money. Okay. My wife was staying at home. I had to bust my butt to make this thing happen. Is I'd sell a little bit and relieve that tension that, it might disappear. It might go away. It's like, no, I'll be okay. I've made money. So that's why pieces ties in with what
that exact quote is in my trading rules. If you were to bring it up there, that exact quote from the trader you're talking about, it's in my rules.
There you go.
Selling some into strength doesn't leave me any better than it would if I sold more but it helps with my nerves at the end of the day.
Right on. Well said, Matt.
I think you went up a little too high on that one.
Did I?
Owen, that next question, I think that's a pretty good question for all of us that really do sit around at the computer all day. The mental game is a challenge for me. That one. Or wait, is that where we were at?
The next one?
The mental part of this challenging market. That's where it is. The mental part of the it's so third question down. You went up high then. Right there. That's the question. That's where we're at.
Okay.
The mental part of this challenging market. The mental part of this challenging market. How to control forcing trades while sitting at the computer all day. How do you guys handle that? How what do you do, Matt? To control your itchy fingers.
Trading. Yeah, itchy fingers. Oh, well, especially in this market, and I'm sure that's what this question is pertaining to, because in an easy, when the wind is behind your back, it's easy to, in this market, if you get stopped out or you get a tail bar the same day and you're out, well, by nature, most people think, what's the next position? They don't even give it any time, any space. There might, what I do, to take it back a notch, what I do is if I get stopped out of position, and it's a good stock, it's not, some crappy stock, it's on the key list, and I get stopped out on a tail bar, I'm looking at the broader picture. There's a reason why I was wrong. And I try to look at that in the sense of, do I really want to put more capital into a position I might get stopped out on? No, I don't want to risk my my capital and my emotional capital, as Pat says. There's a reason that breakout failed, and it was in a leading stock, and I got a tail bar. That's telling me something. Yeah, it's telling me not to press. That's for sure. Yeah. That means if a leader is tailing like that or whatever, then the broader market is probably even weaker if a leader is doing that. So I need to listen to that. It's telling me the market, the stock is telling me that I was wrong and the market isn't ready for it. So I'll just actually completely walk away or do something else. I mean, I'll still sit at the computer and work on other things, but I got the alerts set and I'm not even watching them. I'm not even watching the stock market. I'm keeping preoccupied with something else. Mm-hmm. That's the biggest thing for me anyways that's worked, is that I've just kept busy doing other things. If certain positions I've gotten stopped out at, maybe towards the end of the day, like I was stopped out just the other day, maybe towards the end of the day it's starting to show strength, and I'll buy a little bit, but it'll be a quarter of what I bought last time, just to test position. Yep. If I have a string of losses, if I have 6, that's no big deal in a 10 trade. But if I have 7, 8 in a row losses, I am completely done. I cut myself off right there. Yeah. There's no reason to keep on pushing it to change, to change. The market is not ready for those kinds of breakouts.
I think this person also hits on the addiction side of things in a way, yes. Sitting there just watching the charts, hoping something is this. I think that they just maybe should, like you said, find something else to do. You can set your stop, your buy stops and such, your alerts, and whatnot, and then just not pay attention to it. Find the stocks the few stocks you want to focus on.
That's it.
And just don't look at it. Just wait for the alerts to go off. Because if you're going to sit there and keep looking and looking and looking, you're going to drive yourself crazy.
That's why I take stocks off the list all the time. Less and less. Less is better. I see this, and it ties in with all these statements here. This last one. I'm struggling with fear of missing out. One of the things that we do, and this is for everybody, we provide a key list. And with the video, this sounds arrogant, and I don't mean it this way. That's all I look at. He said, oh, no, you've got another list. Oh, no, I don't. That would be morally wrong to do that. To say, yeah, I've got something else, but I'm not sharing it with you. I'm not going to do that. That wouldn't be right.
That would be,
but then take the ones off.
Useless.
Yeah, exactly. We prune the ones off the list. Like I'm fear of missing out. If you focus on the key list and just say to yourself, and this is honest to God truth, say, I'm only going to do this clean and simple base breakouts. I'm not going to do high or low setups. I'm not going to do anything else. It's a clean and simple flat basis that Ray Charles could see when it pushes through that pivot line on heavy volume. I'm buying it. Say to yourself, you do that and forget all the other stuff, and you will make money. The biggest winners, Owen, you and I have been doing this together a long time, and you know this. The biggest winners we have ever had come from clean and simple base breakouts. And you could say, okay, that's good. What's number two? The higher low setup. Those two. Mm-hmm. Forget everything else.
And sometimes you just have to wait for it. I mean, a real world example, talking about, compulsive trading this past week, there's been several days where I've just ignored the market. In fact, there was one day Pat called me about 2:00 in the afternoon. And he says, hey, take a look at this, put this chart up. And I says, I don't even have the platform up. I turned it off a little bit ago, But on Friday, here's a real world example. Amazon. I think it was the last stock on the key list, the final one. Okay. So, the group isn't the strongest, right? Because you order it in group strength from top to bottom. And whatever the trigger price was, I don't know. I had a buy stop in on it, and it triggered early in the day, and it went up a little bit. And I tried to get $1 out of it. My method these days is to sell a little bit when I've got $1 profit. And then if it comes back down, selling it at strength, right? But I'm selling it so quickly, selling 30% or even 50% so quickly because the market is the way it is right now. Okay.
Yeah, but when you're buying 10,000 shares, that dollars, that's good.
Yeah. So 4,000. What'd you? How many thousand? How many
10,000 shares did you say? He said 10,000 shares of Amazon.
Shares. Yeah, you got me pegged on that one. So what did it do? It went up, and either I didn't have it set right. I just don't remember. I don't have my charts up in front of me, but it didn't give me my $1. Okay, it turned back around, came back down, fell back down into the base, and I was out. I said, that's it. I'm done. Yeah. Later in the day, an alert went off, and I bought it again. And if you look at it now, it closed up a couple of bucks. Okay, so I got my buck. Okay, and then I might have sold a little bit more into the close just to lighten up for the 3-day weekend. But it works. You can't be afraid to get back in as long as the market says okay. Look at the overall market, and we closed at a good high note on Friday. Yeah. So we typically look at a good close like that as a good opportunity to stay long. And I know Pat put out an alert on Friday afternoon, buy a little SSO. So always be ready to get back in. But on those days, I'm pretty sure it was Thursday, and there might have been a couple other days last week where I just said, just not interested. This is just too much of a chop fest, and I don't like it. So you just back away.
Yeah, I'm kind of rolling back a little bit, thinking, well, I'm afraid of missing out or being stopped out. Now, maybe wind it back. Why are we wired that way? Why are we afraid to be wrong? What is driving that case of being wrong? Yeah. In the grand scheme of things, you will be wrong more often than not. So you got to learn to be okay with being wrong. It's going to happen. It's going to happen more often than not. You got to train yourself to be wrong. But I think the biggest part I picked out of what you said, Owen, was that I had an alert that told me it was, starting to creep up again. Whatever your alert was, when I first started, if I was stopped out of something like that, like Amazon, I'd take it off my screen. I wouldn't set the alert again. And then towards the end of the day, I'd watch it, go up, a couple points. I thought, well, crap, I'm missing out on these. So if you get stopped out, put in another alert. If it hits that level, you're going to buy some.
Yeah, I think that's
and just to make sure that it's clear, the first time I was in on Friday, it was a buy stop. I set it in the morning. I thought, oh yeah, this looks okay. But the second time I did it, I didn't put a buy stop in. I put an alert. Mm-hmm. So
I think that's important to know. Don't be afraid to get punched out a handful of times. Right. One of those times it'll take off. but you
Right.
just
I
have
think
to be
that
ready for it.
I think that plays into the very next question. Actually, I think you just answered it with your with your statement there about overanalyzing. Turn off the noise. I feel like I'm overanalyzing, and I think that that's exactly it. You got to stop overthinking. You got to just jump in when you see it, and not be scared to do that. And know that you can just get out. Just set your alerts.
And constantly factor market action and the price and volume action. I know we all know this, but I got to say it. And the price and volume action on the stock in there. And, the M and mission winners, the market, and we all know this, it's for everybody. If the market's crummy, be really careful. This is a video slot machine, folks. I'm not kidding. It'll suck you in just like a casino. I got to do this. I got to do this. And sometimes, no, just sit tight and wait. Just sit tight and wait. If you have a real compulsion to do something, as these gentlemen are saying, you find it clean and simple, do less shares. We can't constantly think about what we're going to make. We've got to think about what we might lose if we're wrong. So we control risk, because we don't want to be in here for the day. I don't want to be in here for the week or the month or the year. I want to be in here for my lifetime, building it, and building it. And you will make more money faster in a good market with less hassle. That's a fact. So.
That next question, removing distractions. You want to read that one, Owen? It's rather long.
You want me to read it?
Yeah, your voice. We need to hear that nice radio voice.
Oh,
Morgan Freeman voice.
Removing distractions. So I will often jump from time frame to time frame and look at all the moving averages on all the time frames as well as the indexes before buying. I feel that I question the setup and wait for more confirmation, or I can get in at a better price. I feel that I question the setup and wait for more confirmation, or that I can get in at a better price. So it's innate, it's a system. He's second guessing a lot of things, double checking, triple checking, quadruple checking, and then second guessing and going in with hesitance. I mean, it sounds like that's just the trading plan isn't solid yet, right? I mean, there's still some solidity, some firming up, some framing up of a trading plan that needs to be developed, and then confidence needs to be built, because doing all that is not following a plan. It's kind of all over the board, right?
Mm-hmm. You got the alert for one reason, right? And then maybe you drop it down to see if the volume's there, and let's say it's there. But now, if you're not buying it after confirmation of price and volume, and you go to look at other things, that's opportunity cost lost. But you're giving yourself a less solid hand by seeing what else is it mirroring the averages. Most stocks outperform the averages that we're in anyways. It's a good idea to see where the market's at, but I mean, if you got price, you got volume, go. I mean, you got to be confident in that, like you said.
And if you're lacking the confidence, just go smaller. Right, just go smaller. Just don't try to go. Don't try to buy so much at once. Just buy a little bit until you actually see that it's working.
And that we're just constantly refining our skills. I used to say this at the meetups all the time. If you can't make money with 1,000 shares or 100 shares, you're not going to make money with 1,000 shares. Strive for consistency. And then build. Also know this, research indicates this, and this ties into a lot of these questions. And this isn't from me. This is research from other people, professionals. Their biggest losses occurred after a string of really good winners. You get the Midas touch. Everything I do is golden.
Yep.
Take each stock, investment by investment, and manage it accordingly. That'll help.
We shake our heads because we've all been there.
We've all done it. I know. I mean, I've got a very short-term memory when it comes to the market. I'm very thankful for that. But I know I've done it. I've had a string of winners, and then then shortly thereafter, nothing works.
Overconfidence is a big problem in
Yeah.
any
Death sentence.
factor of life. Anything. You can't, if you have overconfidence, you're going to trip yourself up no matter what.
Yeah.
And I found out that, hitting those win streaks, you're like, wow, I'm rolling in this. I really know what I'm doing. And then the market humbles you almost immediately after. Almost immediately. And I thought, wow, how can I prevent this? Is what the question I was asking. And I found out that after a very large set of winners all in a row, or very immense gains all in a row, I'm going to take a few days off.
You're going to go to Bali?
Completely off. I got to let everything digest. I'm high in emotion. I'm elated. I think I got the market figured out. I'm the best thing is sliced bread. That's just typical things. And I'm out of there. I'm out. As soon as I hit a string of wins like that, I'm out. I take a week off, maybe even 2. Let myself get back down to neutral. I miss stocks, whatever. I don't really care, because it'll always be there and I'll catch more winners, but I need to let myself get back to neutral.
Yep.
One of the questions you can ask yourself is it you that is the winner, or is it the market that's the winner at that time? It's the market's just doing so well, but it's not really. Anybody can make money at that time, right? So you have to
absolutely
not just stop with your own tactics and strategies, just jumping in at everything.
Yes. If you're not humble, the market's got a million ways to humble us.
Yes.
I sat in that chair going, why did I do that to myself? Why did I do that to my family? So, you got to take it stock by stock.
Let's see. Overtrading and consistency. That's kind of what Pat was going on just a second ago. Switching between different trading styles and setups. We talked about that earlier. Mm-hmm. You need to stop looking at different things. You need to find what suits your personality. If you're sitting there and you're on the edge and you're like a race car driver at the computer, maybe day trading is for you. But if you just want to be relaxed and not so stressed out, and you have a family and such, maybe you need to follow someone like Pat, not to tell you what to do, but it's a more relaxed environment.
You'll live long. Yeah. There's a really successful day. He's one of my best friends. He's my brother from another mother, right? He's a VIP. I talked to him. We had a long talk yesterday, as a matter of fact, on the phone. And he's a day trader, and he does great. But he's locked on that computer. I mean, he is locked into that computer all the time, which is fine. But I want to, for me, this is just me. I want the stock to work for me instead of my eyes and fingers all the time. And it irritates the tar out of me to see something go up and I sell it all and it keeps going off and I can't find a way to get back in it. And then I finally say, shoot, I'm just going to buy the dang thing. And I buy it and then it starts to drop.
Then it goes down.
Boom. Yeah. It's like, Patrick, you just defeated yourself. So for trend following, stay away from it, which leads to a really important point for everybody. I encourage you, if you haven't read the book Market Wizards by Jack Schwager, I know I say this a lot. That book will improve your investing results. I guarantee it. Jack Schwager, Market Wizards. There's the new Market Wizards. They're all good. I would read that book and study it, especially the interview with Dr. Van Tharp in the back, THARP. That changed my life. He was a great guy. He passed away a couple of years ago. He was a great guy. So anyway, just wanted to share that with you. Big parts up here.
Mm-hmm. I know we talked about this a little bit earlier. Rather than selling at the first hint of trouble, sell some into strength. But he's talking about need to learn when to give room. Tough in this market. It's
I was just going to say there's a lot of variables in that.
There is. And this market has not given us a lot of opportunity. There's you can see it in the charts where a stock will go up. A perfect example again is Amazon from Friday. It went up a little bit and turned tail and went way back down. It dropped a couple of bucks below the trigger, as I recall. And I would not, well, I don't want to give it that much room. So just look for that next opportunity. You can't say, oh gosh, I put my stop at $3 below and I got stopped out, so next time I'll go $4 below. Don't get into that game. We're getting a lot of shakes on that one.
Oh yeah.
And all that means, guys, is that we've all done it. We've all tried that. So you have to have a stop loss where it makes sense. One of the things I'll do is put a stop loss, or I'll actually look at the key list. I'll go through it stock by stock, and I'll pick a stock based on where my stop is going to have to be. If yesterday was a big range, big wide bar, big range, I will not necessarily do that one. If I have to put a stop where it makes sense at $5, $6, $7 below, it's not going to be put on a buy stop for me. So,
given your current trading plan, right, of picking up $1, right?
Mm-hmm. Right.
That's what, and that makes sense for that plan. So, as the team is listening to everything that we're talking about, Owen styles slightly different now given the market. I don't know if it was always like that or not.
No, it wasn't.
So, as the team is listening to us, don't take what we say as, in stone, but take kind of a few things of what you hear and implement them. If Owen's trying to pick up $1 and the possible stop loss on a stock that he's watching is 6, well, that blows his whole system up. It doesn't make any sense at that point. He's got to fit within the parameters that he's made for his style and trading system that makes sense. And he won't trade that stock. So I think that's really important to note for the team.
I think also about the Amazon trade that you did Friday.
Mm-hmm.
You got in, but then you got out, but then you got back in at the end of the day. If you would have just sold 50% or something, you would have made your money back. But why wouldn't you do that
on the first time? The first time it went up,
just so the members understand why you got out completely. Not just
because it didn't hit my dollar target,
right? And also, I think another is what kind of like what I was just thinking was about that is what Pat kind of says is you don't know what's going to happen the rest of the day. You don't know what's going to go back up. So you need, especially the way the market is, right? So you would need to get out. There's no reason to stay in. Like you said, it didn't hit your dollar, but you should get out. Then you shouldn't just sit there and, get a bigger loss or lose more money over it. That's what I was just saying.
Capital for the next trade.
Yeah, and you don't see and you don't see the future. You don't know what's going to happen later on in the day or the next day. So
And at that time, the indices were headed down. All the big max lists were headed down. I mean, it was validating that this thing and the market was just been terrible. So it doesn't make any sense to hold on to that thing because it could have dropped $6, $8.
Could have dropped even farther than that.
Yeah.
And that leads to a good point too. This is for everybody. Banish this phrase from your thought processes forever. It just has to come back. Why? Because we own it? Because you own it? No, it doesn't. It will do what it's going to do. And when we accept the fact we never argue with price, things become a lot easier. Mm-hmm. It's an if this, then that mindset. If this happens, we do that. We buy more or we sell. That's all. It makes it easier. I read this years ago, and I think this was from Reminiscences of a Stock Operator, where Jesse Livermore and somebody else is talking to each other. And one says to the other, I think it was Old Partridge. Yeah, God, I'm losing sleep. I've owned these stocks. I'm losing sleep over my stocks. And the other guy responds, sell down to your sleep point.
Yeah, I've heard that a few times.
The idea of that high tension clouds our judgment, our reasoning. And so do things.
Reduce your stress.
That's it. And selling some into strength. I know I pound the table on it. It helps. It helps.
If you buy a position and immediately check the aftermarket hours and then the pre-market hours beforehand, you're probably too heavy.
Yeah, that's it. Yes. That's it, buddy. Yeah.
Yeah, if you're sweat, like I've seen some of the VIPs actually in Discord really early in the morning talking about like the pre-market and just it's like, guys, just wait till it opens to see what happens.
So much can change.
That's it, Rich. Yeah, that's for me. That's why I've never. I don't go into the chat room deal. Chat rooms. That's just me. Too much. And then you start. Oh, look, they're doing this. Oh, maybe I should do that. Oh, look. Oh, they're talking about this. Oh, they made money on that. Maybe I should do that. It's like.
Man,
tough.
I completely just have like a pride in our Discord like group. They're very in tune with the whole like awesome. System. Most of them in there, if somebody comes in there like what you're saying is and has an attitude, there's going to be 10 people that are going to try to help them and be like, look, no, that's not how Pat does it. This is, you need to follow that. You know what? You should go on the website. We have over 1,000 videos on there that you can learn about this stuff. I mean, our Discord group is just it's amazing to see these guys help each other out. So
I love that. That touches my heart. That is great. Just
believe it or not, I put a little. I never was really involved in the Discord before. I was in. But just kind of, lurk around and seeing the team members, offer their knowledge and help. I thought, wow, maybe I should do maybe I should spend a little bit more time.
Inspiring, huh?
Yeah, it kind of provoked me a little bit. So I will be in there more often, that's for sure. Checking it in at least, probably once an hour. I'm usually in there, whether it says I'm online or not. I'm usually, checking in.
It's lurking.
Yeah, basically, yeah.
Lurking. I like that.
This next one, confidence to trade bigger. I think we've covered that.
Yeah, we did, and it says eventually I need to, in order to get 100% invested in a good market. Well, it's not a good market yet, so
that's not.
When it is there, we're going to be there.
It will happen.
I need to focus on 3 or 4 stocks only in the morning and have stops and and stop having fear of missing out on stocks I miss.
Yeah,
that's a good statement. Yes,
it is a good statement.
It's a good statement. Less of a question than a statement. Maybe it's just been reframed, but
I think
3 or 4 is enough.
Yeah, I think Paul kind of honed in on that. The last webinar,
which is why we constantly trying to help take stocks off the key list.
Right.
I don't do
look at the key list.
Just less all the time.
Right.
And even prior to being taken off the key list, go through that list stock by stock and see which ones fit your personality and pick 3 or 4. And that's your world for today.
And then just forget about everything else. Just forget about all the rest and not even worry about it. Now, don't look at what everybody else is doing.
And as far as missing out,
on the key list?
Pardon me?
Go ahead.
Oh, as far as missing out, Matt, you said it earlier. There's always another. You were talking about it. You mentioned it when you say you take a week off after a big win or a big loss, or 2 weeks off. You say, "Hey, I might miss something." It's always going to be there. It always will be there.
And you're always going to miss something. It's just impossible to hit everything.
That's the other. Yes, that's the other side of it, isn't it?
Yeah,
it is. You're always gonna miss something that you wish you would have had eyes on, or maybe the position you got into, and then you got the alert for the other one, but you like this one better for whatever reason. The other one starts to run.
Yeah,
that's just a part of it. That's
you just gotta let it go.
Happen.
Well, that happened to me yesterday. We'll go back to Amazon again. I picked Amazon. What was the one that ran? RBA, was it?
Yeah.
Yeah. I mean, it ran like a big dog. Missed it. You know, by tomorrow I'll have forgotten about it. But
I'm going to call you up tomorrow I forgot to tell you that about RBA. It's running your race. Each of us runs our race. Just like these are the ones I want, and this is what I'll focus on. And
I think I mentioned that exactly that in the webinar. I think you had put 18 stocks on the key list. I went through them all, made my notes, made my adjustments. I picked 4.
Yeah.
That was it. That was the 4 I want that I was looking at all. And I didn't even put them on my alert page on my trading platform. No alerts whatsoever. Now, did I get an alert from Pat that says, buy or add on RBA? Yeah, of course. Of course I did, but I honestly ignored it. That I didn't like it. It just didn't fit me. I didn't, there was just something about it.
Yeah.
No, all the alerts that he gives when they're buying, I might take a handful of those for whatever reason. I'm okay with that. Some other people get in. That's great. I don't get in. That's great too. I'm poised, ready for the next position.
Yeah, you find what fits you. That's good.
And that dovetails right into the next question here. Struggling with fear of missing out when you say folks own stocks and on the key list, but there were never alerts sent out. I mean, how do you feel about that, Matt? Somebody else got into the stock and you didn't.
I'd say you followed your rules immensely and just manage it accordingly. I mean, I'm happy for you. Those positions that other members are in that I'm not in, I'm happy for you. You caught it. It was great. It fit your style, however you did it. That's amazing. I'm glad you were able to buy without hesitation and have everything predetermined beforehand. I'm happy for you. I can't be upset.
I think there's another side to the coin on that one, though. Some of those aren't even on the key list. The ones that get on that list that Pat is watching. Some of those
not on
are
today's key list.
Well, yeah, or they could have been on past key lists, or they could just be decent stocks that VIPs have told him, hey, this and that. We eyeballed into this. And that first initial buy isn't going to be an alert because the VIP made that decision, or several VIPs made that decision. So then Pat puts it on his list. So you guys, you have to try to watch your own stocks. You can't just always expect Pat's alerts.
I will say, though, the vast majority of stocks that I watch, and I'm not being arrogant, come from the key list. And there's a very important reason why. Not because it's a great list, but it is. But more importantly, and Owen and I have talked extensively about it. Yeah, as a service, I'll watch other stocks sometimes, but there's
very rarely. I hate to be the heavy here, but you can't. Yeah, you can't.
But you can't do a lot, of course. I just wanted to just let this person, especially that's having a problem with this, understand that these stocks, these alerts don't go off at first because you're not the one buying the initial buy. It's a VIP you're buying the initial buy.
That's it.
And then you're watching it. Yeah, so there's not an initial alert. It's not an initial alert, You're buying what fits you. They're buying what fits them. They're letting you know. So
and I'll take that a step further. I was probably in that position early on in Mission Winners, especially when the market was ripping. So getting a million alerts and, I'm in something and it's not moving as quick. But over time, you begin to take what Pat has taught us and implement it. And real life example was LI Auto this week. I had talked about it, how my entry was almost a full $1 before the actual buy point that we had. I think it was 38.40 was the actual buy point. It had dropped down in the first 15 minutes and then started to poke up in the next half an hour. And I snagged it at 37.42. And you could see it on a 15 or 30 minute chart. But taking what I had learned from Pat, I was able to determine my own risk tolerance level, where it felt good stock, and was able to get a more aggressive entry. And if you manage it accordingly, you know, you're good to go. But that was my cheating spot. If so, I wasn't going to wait till, you know, take out the highs of the previous day. I wanted to get a little early in starter position and kind of build into that. So, you know, other stocks were moving at that time. I think it was Harmonics or HAE. I think that really ripped Haemonetics really ripped that day. I watched it. I watched it zoom all the way up. I thought, wow, that would have been nice. But, you know, they don't all do that. And when you're not in them, you know that you're building the list that you use, that you provide us, you know, it provides that opportunity. Yeah. And you're just not going to get a part of all of them.
Now, on this on the list, this page here, I put the definition of FOMO, fear of missing out, so people could actually see what it really entails. You know, what others, you know, psychologists and everything, how they interpret that. It's an anxiety. You know, it's not just, you know, you have to understand what you're going through with that. So I wanted just to put that up there, so they could actually read it, see it, and know what, you know, what that is entailing. You know, when you're fear of missing out on something, you know, you're having a bit of an anxiety attack, and you have to kind of train yourself to get out of that. Stop worrying about everything. Stop worrying about what everybody else is doing, especially stop worrying about like something you didn't get into that you see other people have got into. Matt, like you said, there's going to be more chances always. Yeah. It's never going to be the last trade. You know,
that's right.
That's right.
If we take you know, we find a couple of stocks. Well, first off, before we even do that, I talk about clean and simple. Okay.
Do you?
If you found a couple of simple bases that conceptually make sense, probably, hopefully on the key list. Okay. But you look at those, focus on those, forget everything else, forget what everybody else is doing, and say, you know what? This is my race. This is my money. I see that spot. It's pushing through there. The market's good. It's pushing through on a good pickup in volume on the 10-minute or the 30-minute of the hour. I'm buying it. That's it. Doesn't matter what other people are doing. I see it and I'm buying it. It met the constraints necessary for success. There you go. It tied in with what Rich said. It works. It works. And less stress dramatically improves our decision-making skills. It really does. Just if you're going through a really stressful time, I encourage you to stop investing. I've been through those times. Serious things that happen with me or somebody else. And just pull back. Pull back. It really helps. There's the psychology of it. High emotions will have a negative impact on your decision-making processes. And yeah,
it is.
Oh, that's off the top. That's baloney. But one of my degrees is in psychology, and we discussed this stuff. The most advanced paper I ever wrote in these groups was on suicide. We went deep on this stuff. All right. I'm going to mean to be a downer, just hashing through stress and the impacts it has on our thought processes. So we'll do what we can to eliminate or minimize those stresses. And
this is one of the reasons. One reason I like this topic as well is the thought behind everything, because I studied psychology for 3 years as well, and everything is tied to everything. Stress. If you're very stressful and you're putting more stress on yourself, everything's going to be affected. Not just your trading, but your whole life. And so it's better to reduce your stress as much as possible.
Wisdom.
If you're going through, like Pat said, a hard time, definitely don't trade as much. Just reduce your everything as much as possible. Especially don't day trade.
That's it came out in the webinar the other night where I don't know what context it was, but somebody said, don't use the market as your therapy to escape life. I mean, that was the just. Did you say that, Matt?
Yes.
That is
Yes.
so true. That was a huge mistake. Don't ever attempt to. Oh well, I'm just going to ignore everything else that's going on in my life, and I'm going to go hide in my office and dig into the market and escape life. No.
I used to say at the meetups. I want you heard.
It's like paying an attorney.
Yeah, yeah. I used to say it at the meetups. Wall Street is a very expensive therapist. Man,
yeah.
Back off.
Yeah.
Early in my career, I didn't know how big the emotional factor played into my trading, and I've since fixed that. And Pat, you know this, and for the members that don't, I experienced some real life lows at the beginning of 2020, and yeah, it was terrible. I mean, just drop you down kind of to your knees. And I was out of the markets for the better part of 6-7 months, not even touching. But I did watch the market, how it reacted. And I tell you what, if there's anything that to help with FOMO, is get out of the market. If you're having a hard time in the market, FOMO, watching other people, maybe you're on Twitter and seeing what they're in and stuff like that. One, that's noise, you got to block it out. But two, watch the stock market and see how it reacts when you're not in it. Watch these stocks, see how they're acting when you're not in it. The volume price relationship, the ADMA, the 20 moving average, see how they all play out and react. Get a feel for it. Get a feel for the volume relationship. You'll see stocks take off and rip. You'll see stocks break out, fall, collapse, come back again, kind of like Amazon. Yeah. You'll see that, and you'll develop a little stronger mental state when it comes to that, because you don't have a dog in the race, but you're watching it, you're learning it, you're seeing how everything reacts. You're educating yourself in the whole process.
It's good.
Well, let's wrap up, because I think we've handled the first part of the question here. Let's wrap up with this right here. Is it possible, guys, to almost always not care if the trade wins or loses and not feel a thing after 3 or 4 stop outs?
No. No. You're always going to feel that.
That group that doesn't feel that is very, very small. There are traders out there that have no emotion attached to this, to wins or losses.
I think those are mainly brokers that are holding other people's money.
Yeah, very few and far between. But I mean, everybody's laughing on here. We all feel, Owen, how did you feel, I guess, when Amazon dropped, and then you bought it and the buy stop dropped, and then, I mean, what were your emotions going through that whole trade?
Well, that wasn't an emotional trade. I mean, I was trying to think of some other example that I can give you. I guess I guess I don't have one, but yeah, we feel stuff, but we understand that there's always another opportunity. There's always a way to manage it. We manage our risk. I mean, we are, first of all, risk managers.
That's it.
And I have one for you, Owen, if you want to discuss it. I can edit it out. Yeah, a trade I know that you got out of a bit too early that you got upset about.
Oh, I get out of trades too early all the time. Sure, yeah. Absolutely.
I mean, I just, I have that ridiculous, everything gets stuck in my head. But I remember one time you got very upset about getting out of trade early.
We'll run with it.
I think it was Ford. I believe it was Ford last year.
Ford whipped us all around, right? Yeah. We all got into Ford, got out.
That's the one that, but yeah, you got a little emotional over that one. I remember talking to you about that.
That was probably about not making what I could, because it. I think we'll probably remember a little bit about Ford. I know I say I have a short-term memory, but yeah, I do remember it.
You got out everybody got out a little early on that one, and then yeah, you were like, oh, but yeah, you had that.
Look at it run.
Yeah, like, oh god, should have got out. But yeah, I mean,
I think we all go through that.
Yeah.
You're always gonna get
nobody's
stopped
immune
out.
to it, right?
Yep. You're always gonna have those
sure Pat-
stopped out early, continue to raise, maybe a string of losers. You're always gonna have that. But I think the bigger question is, how do you manage that thought process when it does happen? Because it does happen. It happens to all of us. We all have our own way of handling how our minds and bodies go through that. You just got to figure out yours and do what you need to do to get past that, or make it at least sting as little as possible. One of the two.
Yeah. And I think from a statistical perspective, one of our best edges is this: we know what works, and we know the tactics that work. And does it work every time? Nothing works every time. If it did, a person would find it and they'd quickly own the stock market.
Yeah.
So what do? And Bill O'Neill talked about it. We have a process and we limit losses, knowing that more times than not, and that is our edge, more times than not, we will be right. More times than not, we will be right when we buy a stock. But keeping them extremely small, keeping the losses extremely small, does two things. It protects financial capital and it protects emotional capital. And something that I do, and I've done it for decades, is after I've got a stock and I took a loss on it, I take it off my front page and I won't watch it anymore. And I'm well aware and know that that's reality. It's going to happen, but I'll try to minimize that negative emotional mindset and remove it and say, more times than not, I know when a stock does this, it fails and it's going to keep falling. I can live with that and I can rest with that. And I'll flip that coin. More times than not, I know if it's a clean and simple base breakout and it's got all the constraints met, it's going to work. It's going to work. And that is an edge that we can use and we can live with that. 3 or 4 stop outs, that also tells you something. And we always monitor the markets. Always, and the action of the stocks. If you start seeing that, it's telling you not necessarily that your process is wrong, but something's wrong with the market. Don't fight it. Don't argue. You can say, Pat, that sounds esoteric. What do you mean? Have we been doing much buying this week? Come on, folks, be pragmatic. Have we? No. Why? Because we don't argue with the stocks. They'll tell us what to do. It works.
5 to 6 bad breakouts or failed breakouts is definitely telling you that whether you see it or not, that there is some underlying pressure that is telling you maybe you shouldn't be deploying capital into the market.
That's it.
Because in a good market, those breakouts more often than not will continue to lift.
Right on.
And you'll see follow through the next day.
Yeah.
That strength. When they go up, rise, tail off, there's something there that's telling you you shouldn't be invested in the market, or if you are on a very small risk level, if you feel the need to hit that button.
There you go. It's good.
Absolutely. Good stuff, guys. Well, I think Rich said at the very beginning of this that he had page 2 of these notes to go through, but I think we've reached our point at which we should say that'll be next time.
Yeah,
another podcast.
We'll do
it next time, maybe next weekend even, and release one of these once a week for the team. And I think they'll enjoy it.
Hey, Rich.
I think so too.
Rich, Matt, and Owen, thank you all very much. I'm glad that we're all on the same team. And we're pushing each other forward. We're pushing each other up, and we're pulling each other up for us and the entire team. And that's good. There's strength. They say there's strength in numbers. Exchanging these ideas and talking about them. Hopefully it helps. So I thank you all. Also, I hope you all have a great weekend too.
Thank you. You too.
Weekend.
Thank you, Pat. You as well. Don't get stuck inside plumbing too much.
Do that. And we're going to shoot off see some fireworks.
Yeah.
Get after it.
I hear you. Yeah,
Years
the
ago, I
dogs
made
don't
some
like it very
fireworks,
much.
but that's a different story.
You guys have a great 4th of
Yeah,
July.
you guys have a good weekend. Happy Independence Day.
Thank you.
Happy Independence Day as well. Enjoy your weekend, guys. Thank you again.
You guys take care. Bye-bye.
Take care.